So we're going to kick off with a couple of gold miners. So should you be taking money off the table with these, Gary, Ramelius Resources out today or on Friday confirmed it's in discussions with Karora Resources for a potential acquisition of the Canada-based mine operator. Announced the company's securities will be placed in a trading hold. Today it was this morning. Ramelius, one of the biggest outperformers on the market, up 4.7%, forecasting $1.7 billion in gold proceeds over the next 10 years from its Mount Magnet site in Western Australia. Is this one of the stocks that's been left behind, or is it getting ahead of itself?
Look, I mean, you've seen gold obviously move to a new high here. So we've seen in high inflation periods of the past there, we've seen particularly energy and precious metals have been two of the more robust performers there when inflation's high. So gold really hasn't had a big move like energy has in the last couple of years. So this potentially gold breaking out here, going to a new high is kind of positive, but it is a sector which has got a history of letting you down occasionally here. I think for every 2 times that I traded here, it'll run and then sort of fizz out, and then maybe the other time it'll run and keep running. So you've got to be prepared for that. But the Ramelius is probably not showing relative strength in the sector. Names like sort of Northern Star, Capricorn Metal, CMM, even sort of Perseus, they're probably showing a bit more strength to me. Whereas Ramelius has sort of come back in the last few months, sort of like 180 sort of back to 135. So it had a fairly large correction there, a bit of selling in there. So it's had a bit of a bounce today, obviously good news today, but it is not showing, relative strength. One thing I've learned in the last couple of years is you want to be sort of trading the stocks that have had the strongest rallies. When the metals cool off, they hold up nice and tight. Capricorn Metals just really didn't show any weakness at all throughout the gold decline. And as soon as gold's popped, it's popped here. Northern Star, that's the same here. Ramelius is not looking as anywhere near as strong as other names. So I put it down the list on the gold stocks that I'll be looking at personally.
Okay. Rudi?
Well, those who have been viewing me here for a number of years know that I own gold, but not gold producers.
Right.
So there's a different risk profile there in that, yes, Gary's observation is correct. Gold hasn't had a rally like energy has, but then the opposite side of the coin is gold hasn't had the weakness that energy has displayed either.
Yep.
So gold is I actually think gold has actually performed quite well over the past 2 years or so, and in recent times it has become more bid, because I suspect that's because the market is playing the expectation of Fed rate cuts. Right. And if you combine that with lower bond yields in the US and a lower dollar, then that's the anticipation that's at the moment being baked in gold. Now, when you get to gold producers, the irony is that if gold is a bit out of favor, which you can argue it has been out of favor, but it hasn't really translated in the gold price into much weakness. But in the share market, it has translated to a lot of gold producers underperforming, and like massively. It's not just about gold. As we've seen in February again, a lot of mining companies have problems in keeping a lid on cost growth. And gold producers have been doing that, having been struggling with that for quite a while now. I mean, at least for the past 18 months or so. And that has obviously meant that a lot of that, a lot of those results from those miners, even though they might produce more, it hasn't translated in the bottom line. The costs have been a persistent problem. Right. Now, specifically for Ramelius, if you just look at the share price over a long period of time, it has been a wishy-washy result. I mean, like, on occasion they come out with very, very big disappointments and very weak results, and that translates in a weak share price. Recently, the result was actually well received by analysts. That's why the share price is quite up. This should be, all else being equal, as they have announced, they should have a lot of upside from production over the years ahead. Now, that's one side. the other side is that most gold producers are relatively cheaply priced. So if gold really takes off, maybe later in the year, when we all get excited about Fed rate cuts, those share prices should rally, essentially.
Right.
Now, there's also the comment made by Gary as well. You have to pick which one.
Pick your stock.
You have to pick your stock still, because there's still a lot of disappointment for the sector. But Ramelius, on the basis of history, it's not the safest bet to make. They can always come out with not disappointment. All else being equal, the way they are positioned now, the future should be much better.
Yep.
But I mean, we don't know, yeah. And now they're in conversation with maybe of a merger, which sort of like complicates the whole thing, because you never know how that's going to pan out, and etc. So maybe the sentiment expressed by Gary is correct, that maybe there are safer bets to play in the gold sector.
And also the comments have been made to me in the past with big mining stocks, when commodity prices are high, they find a way to bugger it up. Rather than just stick to their knitting, they go and merge or buy someone, or you know, spend it badly.
We should never underestimate it. That if
not Ramelius, I'm just saying commentary,
because they have done acquisition as well. We should never underestimate that. If you, for example, if you own a supermarket, then the best you have to do is maintain the building and everything that's inside. When you are a miner, that's running out at some stage. Right. So you always have to drill for more or acquire an asset somewhere. You can't just sit on it. And also the grades often they start with the easy grades, and then they have to go for the difficult ones, and then you see the margins just shrink away.
Right.